The real estate market is still taking a beating from the recession, even though we're hearing about a recovery that is starting to occur, and which I do see. However, there has not been a strong rebound in the market, and the market continues to languish. The market has become segmented, so there is more activity in certain submarkets than in others. For example, in the office leasing market, there is still about 186,000 square feet of vacancy between the East and West Shore and the city. Current rental rates are $16.75 to $19.75 for A space and $14.75 to $16.50 a square foot for B space. The city, which has had rates substantially above those of the East and West Shores, is now getting closer to those numbers as the CBD still has a significant amount of vacancy. CBD numbers used to be $18.50 to $21 per square foot for A space and $15.50 to $18.50 for B office space, full service plus in-suite janitorial included. Vacancy on the West Shore for all types of office space, including C space, is over 11%. On the East Shore, it is slightly over 10%, and the city is 8.5%. The sale of small buildings around 7,000 square feet or less has maintained their sale price to pre-mid 2008 times when they were selling at $100 a square foot. Land, on the other hand, is extremely slow. One of the things we now find in many of the townships is that your plan may be first or second on the agenda. Prior to mid-2008, it was tough to be anything less than number 7 or 8 on the agenda and spend a good portion of the night at the meeting. Recently, I had a plan in at Silver Spring Township. In the middle of 2009, I had a plan at Swatara Township. In the latter, we were first on the agenda. In Silver Spring, we were second. The problem with land is not only the financing, but the people that have the ability to purchase it are not looking to build at this time. The lag time between putting it under contract, getting it approved, and constructing the facility, a year or longer, is not in vogue. Investors and users would rather buy a ready-to-go facility and start the income stream sooner rather than later. As additional evidence shows, land is slow. In both of the above examples, the land was sold at a discount. In one case, office land, it should have sold for $185,000 per acre, as in the previous years. This parcel sold at $116,000 per acre. In the other case, which was for a medical use, the asking price was $150,000 per acre, but the sale price was about $20,000 less. So discounting is still taking place, and prices are lower than what we saw in 2008 and prior to that. Flex buildings are holding their rate in the mid $4 to $5 per square foot range for second generation space, and in the range of $9 to $11 per square foot for first generation office space, and $6 to $7 per square foot for first generation warehouse space. Typical sizes seem to be running between 5 to 20,000 square feet as typical to the market. Although absorption is slower than in the past, there are deals taking place. The big box industrial has seen better days. By the end of the fourth quarter, we had landed a 330,000 square foot warehouse user for the greater Harrisburg area. We had 6 buildings having that amount of vacant space or more to offer. Between the East and West Shores, not including Carlisle, we had over 2 million square feet of vacant space, which we toured. The vacancy rate overall for the big box space for the greater Harrisburg area, not including Carlisle, is around 30% for buildings bigger than 100,000 square feet, and currently the rates on proposals, since there haven't been a lot of actual deals, are depressed to levels as low as $1 to $2 per square foot for B space, and the A space in the range of $2.75 to $3.75 per square foot. Retail is also struggling to recover in our market. The small strip centers that have between 1,500 to 4,000 square feet have an overall vacancy in our market of 10%. The lease rates range between $10 to $12 per square foot triple net, depending on the age, location, and occupancy rate within the center. Taking into consideration these same criteria for an anchored center, the rates are anywhere from $14 per square foot to $36 per square foot triple net. The latter are in the newer power centers. Owners now are willing to negotiate, and landlords are actually doing build-out when requested by the tenant, and as a result are attracting better quality tenants. The typical pad sites for banks, quick service restaurants, and convenience stores have dropped in price. Previously, the pad sites were between 120 to 150,000 per year. In the current market, they are closer to $100,000 per year, some below, a few above. Overall, it's not a bad market, but it is a market we're not used to. But it is starting to show signs of recovery. The recovery will be slow, probably until the end of this year or into the first quarter of 2011. The signs are there, it is just going to take time. It's been a pleasure reporting on the last 90 days. If this video has generated any questions or comments on your part, please feel free to contact me through the information on the following screen. And now we are looking forward to the next 90 days.